I'm just stopping this sharing to make this example. Okay, now our next example is here. Guys, please focus on that. Again, here today, what we are learning, determining the taxable income. This part we are learning, and UAE city liability. Here, the assumption already mentioned all the parties to be taxable. I appreciate if you guys raise your hand and I'll mute you. Any participant would like to answer on that? Okay, this is. Okay. So I'm looking for volunteer who would like to answer. Since Kamal, I think you already participated. Memona Irfan. Miss Memona Irfan, would you please unmute yourself?
Yes, sir. Can you hear me?
Yes, please. Yes. Please
Okay.
enlighten about this topic.
Since the accounting income for the tax period is 7 million, but it also includes 300,000 for business entertainment
Just a minute.
expenditures.
Just a
Yes.
minute. First, you have to let us know this is the juridical person or natural person. The second is a resident or non-resident.
Okay. It's a judicial residence, sir.
How you know that?
Um, it decided to expand its operation by opening a new factory, Then it's
No. From this text, if you read something that give you this is juridical or natural person.
because
Because
please
as per
contain
my,
UAE, correct?
sorry,
I'm sorry. Please continue, sir. I'm sorry for interrupting.
yeah, first is a juridical or natural or unincorporated partnership. Which
It's a
one is?
ju- it's a judicial and it's also an LLC company, so it's a limited liability company, correct?
Yes, yes, fine, fine. Okay. Now the second is the resident or non-resident. Quickly,
It's resident, if I'm not wrong, because it seems to
this
be
one.
operating within UAE. And it's an entertainment number of customers, correct? So 50% entertainment expense.
Okay. Now the next. Now you explain, please. You are explaining.
Since the tax pay was 7 million, but it also included 300,000 expenses for business and entertainment expenditure. Since 50% is allowable, we will add add back the 300,000 percent of 50% of 300,000, and then we will deduct the 3,750,000 of the 0% tax expense, income tax expense.
Thank you. Thank you. Okay, guys. Here the mm, most of the people are already answered, and I believe is appropriate. Here the key point I just asked. They we already agreed. Okay, LLC company is a juridical person. Please mute yourself. And the second is that we are saying the key point is entertain a number of customers. This is for customer. Okay, now we understand this is not for employees. Second is saying the RLC accounting income. Now, here we have to understand this part also, read this part also. Accounting income is a 7 million, which include 300K of the business entertainment expenses. Now I'll take one of the more participants because some of the point already we understand. And the one moment, I'll just quickly. Okay, I think time is short, so let's complete this part. Here we already seen the 50, same thing we most of the participant answer on that 50% business entertainment is unallowable expense and 150 must be added back to RLC accounting profit. Why? Because here we said included this 300 already included, which means it's already adjusted. So here the disallowed 150, 50% of this. So which increase the our accounting taxable income. This is the adjustment reverse. So this was the point to understand whether we are catching this point or not. Fawad Aziz, he said the 50%, 300 add back. No, Fawad, you are not giving the appropriate answer. Uh, I think now you will understand what is the appropriate answer. We take the 7 million in which included 300, which means if we remove this, so this will be our accounting profit will be 7.3 million. Okay. But now we are saying 350% is disallowed. So we, instead of 300, we have to deduct only 150K. So 350 already, 300 already deducted. So 50% are disallowed. So we will add back 50%. That will be 150. That is 150 must be added back. Accounting profit when calculating taxable income. There is no other adjustment. for the taxable period. Okay, now we covered this example, the basic understanding we already go through, but now I'll just go quickly. Okay, before I'll just go to the last session. There was one question was there from one of the participants where they're feeling have the yeah, this is the salaries and wages. Okay, let's see this also, the salaries and wages, because commonly this topic is coming. You can search Article 28 of City Law on the Google and you can find out that Ministry of Finance website. These are our article is available during the last session. I already shown that link also. You can go and download and read this one. We already understand salaries and wages related to the owner. Salaries and wages related to the owner, unincorporated business. So these are the basically the unincorporated business where the salaries and wages related to the owner, sole proprietor, and unincorporated not allowable expense. The same just now we are saying if it is an unincorporated business, salaries and wages, whatever we pay to the owner is not deductible. This is the key difference while we go through the LLC and the natural person or an unincorporated business. In LLC, we can deduct the salaries and wages paid to the owner. In natural person or unincorporated business, we cannot deduct. Sole proprietor and unincorporated not. Incorporated business, allowable expense. For LLC, for juridical person is allowable expense. For unincorporated person, we already said is not allowed. Implies salaries following ALP rule will be allowed for city purpose. In juridical, what we're saying, the LLC company or juridical person salaries are allowed subject to ALP rule. And even in the salaries of the employees in the unincorporated business is allowed 100%. Why they mention the ALP rules? What is the ALP? Arm length principle. Arm length principle, what is the salary for the position that you hiring the employee and paying to him in the market? It is in the same range. Why? Because the skill set the person he has and the salary in the market for the skill set, it will not be the same, but it will not be the material difference. Let's say the one position, the market salary is a 20,000, but you are paying 120,000. So this is a big difference. You have to give the justification why you are paying that. But this is not for it. You don't have to worry in case of employee. You have genuine employee. Okay. But this rule, they why they mention because might be the owners or the shareholder, even the LLC company, they add their family member into the business on the payroll, and they can pay the excessive salary to reduce the tax base. The concern is over here. So here they refer the connected person and related party. Connected person and related party. So now one of the question today, they somebody asked subsidiary. If your subsidiary is 50% or more than 50%, that will fall under the connected person. Oh, sorry, the subsidiary definition. Subsidiary definition, then you have to consider all the transaction on ALP rule, arm length pricing. What are the transaction you are doing? The connected person definition in terms of the how we understand what are the connected person. The owner fourth degree up and fourth degree down, the connected person, which means your owner or the shareholder, his grandfather, and down is the his father, and down is son. Then upside is grandfather, and the downside is grandson. Same, the grandfather and grandson. Then again, grandfather and grandson. This is the fourth degree we have to see. But this is not only the up and down, left and right also. Left and right also means your brother, sister, and then their fourth degree, and your wife and the other relative is coming in the fourth degree. Directly associate with you, that is coming the fourth degree. So normally the kingship rule we are mostly familiar, so we have to understand from kingship rule point of view. Now the expense that today we are understand wholly and exclusively for business purpose. This is the most important. They think not personal in nature. There's a personal element must not be there. If there is a personal element, then we've seen one of the example where we've seen this is for his family. That is personal in nature. That is not for business. This rule is not satisfied. Not specifically disallowed. Some portion of the entertainment expenses are disallowed. Here we send specifically if there is some guideline, this is a disallowed that we have to see. Is there city law? It gives something on that. But as of now, we familiar with 50% is for the entertainment expense for the clients, vendors, or the partner is 50% disallowed, but subject to wholly and exclusively for business. Not capital in nature. Not capital in nature. Capital nature, today we seen this example car dealers. Okay, the car we are using for our own business, we seen the capital in nature. The depreciation is a deductible expense. The whole amount of the car will not be deductible because this is in capital nature. You may deduct in this year and keep in using in the business for the future also. So this is the definition. And the next part belongs to the current tax period. What is the current tax period? Normally in accounting, we're familiar with matching concept. Just see from the matching concept also if the expense belongs to this year or no.